Greetings, members, one and all of the Salivation Nation. We have some news about gold's prices. Gold prices actually had settled up for a little bit above $1,200. It pulled back since then. Maybe this is the beginning of a dead cat bounce, but we think it's due to Trump's comments about the Fed. Indeed. This comes to us from Market Watch, and also breaking news, it looks like Paul Manafort was found guilty on 8 counts, which includes a bank and tax fraud, but a mistrial on other counts, on 10 other counts, none of which had to do with Russia collusion. But it still could be something that we pay attention to, because it could have an effect on the markets tomorrow here in the States. We shall see. But nonetheless, gold prices climbed Tuesday to settle at the closely watched $1,200 level after U.S. President Donald Trump's comments on Federal Reserve policy hurt the dollar. The greenback weakened against major rivals Tuesday, helping to boost demand for dollar-denominated yellow metal, a day after Trump criticized Fed Chairman Jerome Powell for delivering interest rate increases. December gold rose $5.40, or nearly 0.5%, to settle at $1,200 an ounce. It has since pulled back from that level. It's the highest finish for a most active contract in a week, according to FactSet data. A popular metals exchange traded fund, the SPDR Gold Trust, is up 0.18%, traded up 0.3% Tuesday. So it's fascinating. This could be the end of the bottom, or the creep out of the bottom, or it could possibly be just a dead cat bounce, as we mentioned. And I also posted a video about a dead cat bounce for those wondering what that is. The precious metals on Monday had climbed up by $10.40, or nearly 0.9%, to log the best single session gain of August so far, as prices bounce back from the worst weekly decline in more than a year. A pullback for the previously robust dollar has largely explained gold's latest move, as the two have enjoyed an inverse relationship for the bulk of the year. Yet gains for gold came even as the S&P 500 0.21%, which tends to move in the opposite direction as bullion touched record highs on Tuesday. Market participants attributed some of bullion's recent gains to investors wagering that the commodity has achieved a tentative bottom. But several analysts, including Naeem Aslam, chief market analyst at Think Markets UK, have said gold needs to break above $1,200 and hold, or Monday's rally could be chalked up to a bull trap, or a dead cat bounce. Although I like bull trap better. Gold remains down around 9% year to date. The dollar fell, and gold gained Monday after reports that Trump criticized Powell for rate increases at a weekend fundraiser. In a subsequent Reuters interview, Trump again criticized the Fed chairman. Attention could remain on central bank interest rate policy as Powell and other central bankers gather for the Kansas City Federal Reserve's annual symposium in Jackson Hole, Wyoming. Later this week, the Fed is expected to raise rates next month and one more time this year, while continuing on a course of mild rate increases next year. And so those essentially are meant to stave off inflation, or to kind of throttle the economic growth. And I think that Trump wants to see economic growth really take off and get better, to further bolster not only for the 2018 elections, the midterm elections coming up, but also for the 2020 election, for his reelection. And it talks about how the dollar index is down 0.52%, and a gauge of the currency itself against a half dozen counterparts was down 0.7% at 95.20 in Tuesday trading, boosted by higher U.S. rates relative to other major economies around the world. However, the dollar has advanced 3.3% this year and 1.7% in August. Stronger U.S. currency can be a negative for gold because it makes dollar-pegged assets like gold and silver more expensive for buyers using other currencies. And there are points in time when gold is driven more by real rates, with non-yielding bullion giving way to higher-yielding investments. But right now, correlation with the dollar is very high and will continue, at least in the short term, to drive gold trade, said Marissa Hernandez, metals and mining equity analyst for Neuberger Berman. Notably, there's a key supportive factor for gold prices in play as well, she said. The cost curve for miners. Should gold linger in the $1,150 to $1,200 area, Hernandez said miners won't make enough to invest in pulling out more gold and will cut production. The market price will presumably level off again. The price can always dip below that, the $1,150 to $1,200 range, but it shouldn't be as sustainable for a long period of time, and that means you may not have a lot of downside for prices from here. She said, but you do need the dollar to be weaker for the gold price to rise significantly from here too. Hernandez said $1,150 on the downside and $1,350 on the upside feels appropriate for gold for the foreseeable future, especially given current interest rates, inflation, and dollar behavior. And I think she pegged it. She nailed it. The mines do have some protections in place, obviously, and can sustain it for some time, but it's only a matter of time before that runs out and they have to cut production. And keeping in sight with her predictions, which I think are probably fair-minded, is that $1,350 on the upside. I've predicted that by the end of the year we'll see close to $1,400, if not $1,400 an ounce. That may not come true according to this, but I wouldn't be surprised if we saw it get closer to this $1,350 range. I'm still bullish for gold and silver for the end of the year. And of course, it's just a sort of a fun way to kind of, it's fun to kind of speculate on these. But I think that these metal prices, I believe that both gold and silver are undervalued now. But again, as many people have said, when the economy's doing good and the dollar's doing great, then it's only natural to see these prices where they're at and low, because gold and silver are the ultimate hedge, and which means that there's times where they may not be needed as a hedge, so the prices will be low and the demand may even be low because of that case. For those of us who hedge, you collect it as a hedge or stack it as a hedge. And on the contrary, when the economy is in trouble, gold and silver go up, and demand tends to increase as well during those times for those collecting it and seeing. So very good. So post your thoughts below on this information. This the news for the day. Again, gold has dipped back below $1,200 an ounce as of the recording of this video, and it'll be interesting to see how this news plays out for Paul Manafort, which really shouldn't be that big of a deal, but it's kind of amazing to see how stories like this, even if they're really not related to the markets, they're related to politics, they can have an effect on the prices one way or the other. We'll see how it all plays out. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.